Hello, everyone. Thank you for listening today. I am Chris Gannon, founder of Captivate Talent. Again, we build go-to-market teams for early stage startups. And today I am joined by Dan Glazer, managing partner of Wilson Sonsini. Really excited for Dan to dive into expanding into the US. So this is a really popular listen for anyone who's thinking about US market expansion. So Dan, I'll let you introduce yourself and give us a little bit of a background.
Sure thing, Chris. Great to see you today. So my name's Dan Glazer. I head up the London office and the U.S. expansion team at the Silicon Valley headquartered law firm Wilson Sonsini. And so Wilson is about 15 offices around the U.S. and all the major tech and life sciences hubs. I head up the London team, which is a team of blended American and British lawyers in London, working with UK and European startups through their US life cycle: launch, scale, raise venture capital, and then exit through M&A or IPO in the US.
Dan, thanks for that intro. Something I'm really curious about that we always try to look for a data point on, but what are a few things that a company should consider before expanding into the US? What are, some top three trigger points?
So the key for me, when I talk to UK and European companies about US expansion, US fundraising, is timing, right? Because I think the biggest mistake that we see companies make is going too early or going too late. And what I mean by going too early is that a lot of times companies in the UK or Europe are looking at the US and they see a massive commercial market, they see a massive capital market, and they say, well, you know what? If we've got product market fit in our home market, well, America loves tech. We must have product
Yeah,
market
yeah.
fit in the US as well, right? And they will go aggressively after the US market. They'll start like spending more on employees in the US, which are more expensive in the US, and spending on building up a US presence. They may send people over from HQ, but it turns out that it's not the competitive landscape that they were originally expecting. Right. And
Yeah.
we've seen that happen to a number of companies, right? That they get over there and they don't really have the product market fit that they thought that they had. They didn't have the budget that they would need to compete effectively against American competitors. And while they might be able to get a foothold, they're not really able to expand beyond that. That's what I mean about sort of going too quickly, right? Or going too early. Because ideally,
Yep.
what you want to do is get pulled into the US by customer traction or user growth. I mean, unless you're going to start the business in the UK and Europe and say, you know what, actually, we're going to optimize for the US just to start. So we're going to send the management team over and build up the product offering and raise money in the US as if we were a homegrown US company. I mean, that's one way to do it, right? But
Yeah.
it's much more common that you sort of start in your home market in the UK and Europe and you build it up and you build product market fit. And then if you want to expand to the US, from a timing standpoint, as I said, you want to kind of get pulled into the US by customer traction and user growth so that when you go and you spend that money, maybe you start moving people over and hiring people over locally, you're pushing at an open door at that point. You already know that there's an opportunity to scale because it's been proven out of it, right? That's the sort of approach of going too quickly, and then how to avoid going too quickly. But then there's the flip side of that, which is not going quickly enough, right? And one of the things that I think really surprises UK and European companies is the speed, the aggressiveness, the cost of competing effectively
Yep.
in the United States, right? And what we see happen a lot of times is that let's say you'll have HQ in the UK and Europe, and you'll have, let's say, a growing office in the United States, and for that office to compete effectively, they need to go out and they need to start spending, mid six figures for top tier sales talent, right? They need to
Yep.
start spending a lot more on marketing. They need to move fast, right? They need to negotiate quickly. They need to sell quickly. They need to be moving at the pace of American business. And when you're running the business through maybe a more traditional UK or European lens, that's really hard, right? And so that's what I mean about not going quickly enough is that when you're trying to compete and win in the US market, but do it through, let's say, a UK or European lens, you're a little bit at a disadvantage there. And you need to be prepared to, once you get that foothold, to sort of, go quickly, because once your American competitors start to recognize that you're potentially a threat, right? They will compete aggressively with you in a way that you might not see in the UK and Europe, right? So again, timing really is everything, and it's getting adjusted to a timing that's a little bit different than the timing and the pace you might see in the UK and Europe.
Outside of timing, so we call it expansion product market fit. And we've definitely seen a number of those companies when we ask them about current customers in the US and they say zero, or they reference a company that they have in the UK or Europe as a client and they say, well, they have a US presence. We're going to be able
Mm.
to sell them to. And it's a vastly different sales cycle sometimes. Um, what are some common mistakes that you've seen when some of those companies have entered too early, maybe, or too
Yeah,
late?
well, I mean, one of them is actually something that you just alluded to, is recognizing that the reference customers, the reference clients, really do need to be, American. I remember the story of a company that we worked with that told me about its first road show going out to U.S. clients. That this was a company that sold B2B into the banks, right? And they told me that every time that they went into an American bank in the United States, and they got to the part of their pitch in their slide deck and said, well, these are our reference customers, and it was like US banks with offices in London, right? And they said, yeah, like, these are our reference customers. They always got some variation of the question, which was, do you mean these banks in the United States, or do you mean their London offices? Right. And when they
Yep.
responded to London offices, they said, we may have well as just responded that we only worked with, like, British grocery trains, right? Because it just made no effect, no impact whatsoever, right? On the Americans, who were like, well, if you're not doing it here in America, we're going to necessarily
Yeah.
discount it. And I'm not saying that is an appropriate way of viewing the world, right? I mean, viewing the world through the lens of there is America, then there is ROW, right? Rest of world is not
Rest of the
necessarily
world.
great either. But what's important is, from a UK or European standpoint, is that when you're coming into the United States and that's who you're selling to, you need to be aware the lens through which your potential clients and customers are viewing the world. And they're viewing it through a lens of being in, the biggest economy in the world, right? That is fairly self-sufficient. And so you will want to over-index on highlighting your experience in that economy.
Yeah, and I think something that I've seen is companies get tripped up on is that they can sell to like a New York City software company, but then they forget about the rest of the country and that's a massively different customer most of the time when you're selling to somebody in Bentonville, Arkansas versus in the middle of downtown, the financial district in New York. Um,
Yeah, no, and the scale of the United States is massive, and as we know, it is not homogenous, right? And it's difficult. I mean, I'm an expat New Yorker, right? Although in fairness, I'm from Jersey, but for these purposes, I'll refer to myself as an expat New Yorker, right? And it's obvious, like, to us, Chris, right, that if you're in New York and you're in Texas, or you're in Minnesota and you're in California, I mean, these are very, very different parts
yep.
of the world, with very different cultures and maybe different sales techniques. But there's an old saying, and I'll say that living in the UK, I totally get this now, right? Is that in the United States, 100 years is a long time, and in the UK and Europe, right, 100 miles is a long way, and that's there is some truth to that, right? Because everything's just a little bit closer together. On this side of the Atlantic. In the U.S., it's pretty vast, and that vastness leads to big differences within the same country.
I had an old CEO couldn't believe the first time he flew out to San Francisco. He was from the UK. He couldn't believe it took him longer to go from Boston to San Francisco than Boston to London. It just blew his mind. And extremely intelligent, very successful individual. And the first time he flew up to San Francisco, he just couldn't believe how long it was going to take him.
Yeah. Um,
Yeah. What about the scenario of we've seen people like they send one or two people over from the home office, um, and undercommit to the market. Have you seen that? How have you seen that play out? It seems like you're pretty staunch on having a big budget and making sure, or the right budget, I should say.
Yeah, and I definitely agree with that bit about having the right budget. One of the things that we often talk to companies about in the context of their US expansion plans is that it's important to think through what role does the American market play in the context of their business and what they're trying to do with their business. Like, and here's an example of why that's important. I've listened to a lot of U.S. expansion discussions and panels and the like, and the question always gets asked in U.S. expansion as a UK or European company, does the CEO founder need to move to America? And I often hear a lot of answers on that, but a lot of the answers are not capturing the nuance, which is that it's actually not a one size fits all answer. Because think about it this way: if you're, let's say, a UK based business, right? That a B2B SaaS business that is selling in all over the world, and you've got strong markets in continental Europe, and you've got a strong market in, in Japan, and you're selling and you're killing it in Australia, right? And you're doing well in the United States as well. So you want to expand there as well. Why are you putting the CEO in America?
Yep.
Right? Like, you're a global business, right? The US is one market of many markets, right? And if they're all sort of generally equal, or maybe I should say, if the US is not the particularly clear winner of all your markets, just because you've expanded to the US doesn't mean that you should be sending your CEO over there. So in other words, if the US is kind of one market of many, then there's not a clear reason, all other things being equal, to put your senior management team there. On the other hand, if you're that same B2B SaaS company, and now a year after US expansion, it's like, well, 50% of my revenue, is coming out of the United States, growing 250% year on year. And we're looking at our forecasts, and we think it's going to be like 80% after 2 years if we get it right. Then yeah, maybe you want to put your CEO on the ground. In other words, the way that we usually answer that question, like what does the team need to look like in the United States, is this: if the company feels that the potential upside of the business, like realistically, the potential upside of the business is to become the market winner or the market leader in the United States, and that's actually a goal of the business, to become the market winner or market leader in their sector in the US, then at some point you are probably going to have to put your senior management team or the CEO in the United States. Because otherwise you are trying to win an away match, right? Or a road game, right? In the United States, right? You're trying to win an away match with your best players back at home,
Yep.
right? And that's really, really hard. The rules are different. The playing field is different, and it's going to be really hard to adjust and win on that field under those rules unless you've got your best players over there adjusting to that field and those rules.
Absolutely. So what are two or three questions a founder or founding team should ask themselves before they expand into the US, or answer for themselves, really?
Yeah. I mean, the first one is what I just said, which is, how big are you
Yep.
really looking to become in the United States? And as a corollary, what are you willing to commit to do it? Right? Like, I'll sometimes talk to companies who will say, right, I want to raise from US investors, my seed round, right? I want to have a US led seed round. And I'll say, well, look, that's a little bit challenging, right? Not impossible, but a little bit challenging to get a US led, a US seed fund, right, to lead the round into, let's say, a Paris based seed stage startup, right? I mean, unless it's one of the funds that's got an office in London, right? Silicon Valley headquartered, but only Silicon Valley based seed fund leading around into a Paris based company. It's hard, right? But I said, look, I mean, if your end goal is I have to have a US led seed round, right? It's got to be, and I'll do whatever it takes. I'm like, okay, we'll move. Like, they're like the best
Pack the
way,
kids. Let's
right?
go.
The best way to ensure that you get an American fund to invest into a European based seed stage company, right, statistically, is to put the CEO on the ground in the United States near the fund.
Yep.
But then if the response is, well, I can't really do that, I'm like, well, you can't have it both ways, right? You have to make some difficult choices as to what you are willing to do to achieve these types of goals, right? And I think companies and individuals will do a lot better when they think about scaling in the US if they think through, like, what are we trying to achieve and what am I willing to sacrifice, right, in order to achieve it, both on a personal level and on a professional level,
Yeah.
in terms of how much of our budget are we willing to spend on the United States? Like, how much are we really willing to risk? Like, are we willing to risk potentially making the whole operation
Yep.
bankrupt, right, for the possibility of going for the brass ring in the United States? And that's a discussion I find I'm increasingly having on this side of the Atlantic, which is
Yeah.
there's a difference between ambition and risk tolerance, right? Risk tolerance is, sorry, ambition is I'm going to go and become the multi-unicorn. Risk tolerance is I'm going to sacrifice the guaranteed 500 million exit to go after the $5 billion exit, even though it means I might zero out somewhere between 500 million and 5 billion. That's risk tolerance, right?
Yep.
And so understanding that ambition and risk tolerance before you go after the US on a professional and company level is crucial.
Yeah, it's I've seen so many we've been brought into so many like restarts in the US where we ask them about the first time and it's like, well, we sent our mid-market AE Ollie over and he was single and said raised his hand to go sell into New York and 8 months later he had a nice holiday and he got shipped back home. Uh and the waste of time, the miss in the market, the little bit of money because they didn't really commit usually, it just blows my mind because they're a year behind them.
Well, it's interesting, you just reminded me of another common mistake, right? Is sort of not only the individuals that might come over from HQ to the United States, and as you sort of alluded to, might have a bit of a holiday or a vacation for my American
Yep.
friends, right? But more, it's hiring, especially American salespeople, who all the great salespeople and the good salespeople all have sort of one thing in common: they're all amazing at selling themselves, right? Which
Yep.
which is just I mean I can tell you, like, being on this side of the Atlantic now, like, that's just not how everybody is on a day-to-day basis, is like an American salesperson. And I'll never forget a comment that a company that we worked with, the CEO, said to me once. He's like, yeah, I'm going to go over to New York and I've got 7 interviews lined up for our first head of sales in New York. I'm like, great, let me know how it goes. He comes back and I was talking to him a couple of weeks later and I was like, yeah, how'd it go? And he's like, well, it was amazing. Somehow I ended up talking to the 7 people that collectively were responsible for 25% of last year's US GDP. Like, imagine my luck that I happen to talk to those 7, right? And like that level of we're awesome is just that's just not
Yeah.
something that you really see as much outside of the United States. I love it though.
Yeah. It is. We get that feedback a lot. It's like, how do I know who's actually good? And we're like, well, here's the next layer of questions you need to ask. Here's how you really have to dig in. So
Yeah.
I want to ask you, is there any indicator of when somebody should retreat or abandon expansion efforts? Or what do you think a leading indicator should be?
Yeah. I mean, just simply over time, a lack of ROI, right?
Yep.
In other words, um, they find themselves consistently spending lots and lots of money and just not finding the sales coming home the way that they're getting them
Yeah.
in the UK and Europe. And look, I'm not saying, after the first month, abandon ship. But what I am saying is that if you've sort of gone about this the right way, which is hopefully getting pulled into the US by customer traction and user growth, so you should be pushing in an open door, and then you start hiring all these more expensive salespeople or more expensive employees generally in the United States, and you find yourself after some longer number of months or a year or whatever, that it's just not there, and you're also seeing back at home, back at HQ, that
Yep.
there's other opportunities you might want to go after. Yeah. That the US is expensive. And I have this discussion all the time on this side of the Atlantic, which is the US is an ROI play. Like,
Yep.
yes, the salaries are higher. Yes, you're going to have to deal with a 50-state system, which requires more professional services, right? Than it requires in Europe. Like that's just the way it is. But if you get it right, the upside is massive, right? Um, but what that also means is that there's a higher bar to it, as they say,
Yeah,
give it a
yeah.
go, right? Like you don't just go and give it a go for no reason. Like you better have a clear line of sight as to how you are going to make money by spending all of this money. Whether it's you're measuring it by months or a year or whatever, if you're just not seeing the ROI, and you don't see a pathway to maybe shifting personnel and getting it, like don't spend good money after bad.
Yeah, there's a you can't throw half punches in, but sometimes you got to realize when it's time to throw in the towel at the same time. But
Yeah.
yeah,
And we see it. I mean, and we certainly see companies, um, that might go for a year or 2 years, but eventually they're like, look, it's for whatever reason, the product market fit isn't really quite the quite
yeah.
what we hoped it was.
Well, I wanted to ask you about actually when you're landing in the US, like first off, do companies need to create a separate entity to land in this market?
So the bright red line of when typically you need to create a separate U.S. entity, and by the way, that more often than not is going to be a Delaware Corporation subsidiary, right? Wholly
Oh,
owned, a
that's my
wholly,
next question.
there you go.
Delaware.
So a wholly owned Delaware Corporation subsidiary of the UK or European parent company. The bright red line of when to do that is when you hire your first employee in the United States. You do not, generally speaking, want to hire employees in the US through your UK or European parent company for three reasons: tax, liability, and ambiguity of employment rules. Very, very quickly, from a tax standpoint, there's a risk you'll end up creating a taxable branch, a permanent establishment, as it's called, of your European company in the US. So you end up getting sort of covered by both tax geographies simultaneously. From a liability standpoint, as I often say, companies in the UK or Europe may have heard that you'll get sued the moment you get off the plane in the United States. That is not true. We usually like to wait a few hours for you to get comfortable, and then all bets are off. No. Um, but in seriousness though, seriously, that the litigation environment in the US is much more robust than in the UK and Europe. And if you have, let's say, an employee of your UK or European company on the ground in the US, that's a direct line of potential liability back into the relatively deep pockets of the parent company. And then from an employment standpoint, there are rules and regulations governing UK and European employers, and then rules and regulations typically on a state level, but some federal, governing U.S. Based employees, right? Those don't align very well. So if there's a dispute, it gets particularly messy, right? But there's a lot of things that you can do without a U.S. company, right? Like you can generally sell, I mean, with some exceptions, you can generally sell remotely into the United States without a company. You can generally hire contractors without a company. You can contract with an employer of record service without a company.
So in terms of setting up that entity in a state like Delaware, just for anyone listening, it's fairly simple, cost friendly-ish process to do
Yeah,
so.
yeah. I mean, and
Ah,
I should explain maybe why Delaware. Because I think that,
yeah, yeah. Good.
and the bottom line is, and what I always say when I'm talking about this topic is that there's one. If you only take away one thing, take away this: Delaware reduces friction, right? Is that setting up in just about any other state is going to create a bit of an administrative hassle and some overhead, that you gotta weigh, is that really worth it, right? Delaware is the closest thing that we have in the United States to a national corporation. Right. For those listening outside of the United States, there is no such thing as a national corporation in the way that there is like a French company or a German company, right? Or a UK company. Technically speaking, there's no American company. You incorporate in one of the 50 states, not all of them. You pick one and then run the business sort of out of that incorporated company. And the one that more often than not people end up picking tends to be Delaware, right? Delaware historically for decades has set itself up as having sort of the best corporate governance law. It's got its own dedicated corporate governance courts. as I said, it reduces friction. And as an aside, right, it is also it underpins the entire venture capital ecosystem in the United States is sort of built on a foundation of investing into Delaware corporations because they've got decades of understanding exactly what their rights and obligations are as VCs under Delaware law.
And just to clarify, you do not have to set up your physical location. You do not have to move to Delaware. You can
That
still
is
have an
correct.
office in New York. You can still move to New York or Boston or San Francisco.
Right. Now, Delaware is a fine state, right? But you don't have to actually put your employees on in Delaware if you don't want to. And it's actually it's very, very common to, let's say, have the company incorporated in Delaware, but you might hire your employees in, let's say, New York or California or whatever. It just simply means that you register your Delaware corporation to do business in the state where you have employees or offices, and then you provide them with local state employment documents, right? So, like, if you were, let's say, a UK company expanding to the US, you set up your Delaware Corporation subsidiary, you hire your first employee in California, you register that Delaware Corp to do business in California, and you provide them with California state employment documents. And then you do that again each time that you go to a new state for the first time and hire employees.
Do you have any, for somebody who's lived on both sides of the Atlantic, do you have any recommendations of locations or specific states or cities where it might be advantageous for somebody to set up a physical headquarters?
Sure. So over time, what we've seen is there's sort of eight primary considerations, right? That UK and European startups have when they go to the US, and I'll try to run through those quickly. Those eight in no particular order, right? Where are your current or potential users or customers? Are they concentrated in any one particular place? And if so, is it helpful to be near them? Number two, where are your current or potential VCs in the United States, right? And certainly the earlier stage you are as a company, the more advantageous it might be to be near your investors. Number three, is there a particular type of talent that you're looking to hire in the United States? Is it concentrated in any one particular place? And if so, is it helpful to be near there? Number four, what is the cost of doing business in that particular city, right? There are more expensive cities, there are less expensive cities in the US, and you want to weigh that as a consideration. Number five, how are you managing that US team, right? In other words, let's say that your headquarters is in London and you are only hiring locally in the United States, not sending anyone over from HQ. Well, if you put your locally hired team on the West Coast, well, that's like a 10, 11-hour flight and an 8-hour time zone difference. And that's really challenging to keep the culture of the offices on both sides of the Atlantic aligned, right? So if you're only hiring locally, that weighs in favor on maybe being in the East Coast and maybe even in the Northeast, like in a Boston or New York, where it's pretty quick, relatively speaking, to get from London or other major cities in Europe, right?
Beautiful 4.5 hour overnight flight. Super comfortable.
Exactly.
Great.
Um, if you are sending someone over from HQ, that gives you a lot more flexibility as to where you can go because you've got someone who's got the DNA of the business that they can integrate in the US. Number six, what sorts of state and local incentives are there to set up in the particular place, right? That each state and most of the major cities have economic development organizations that are there to provide incentives to help you find talent, tax incentives, help finding office space, help you promote the business. And those cities and states often even compete for the best companies. So that's something worth looking into as well. Number seven, what is your travel schedule going to look like in the United States, right? And is that if you're traveling, let's say you set up the office in Boston, but you're gonna have to be on the West Coast all the time. That's essentially a transatlantic flight, right? That you're
Yep.
going to have to be taking constantly. I mean, there's a reason why so many U.S. corporate headquarters are in the Chicago and the surrounding suburbs, right? Is that from O'Hare Airport in Chicago, you can get pretty much everywhere in the U.S. in like 3 hours or less, right? So think about what your travel pattern is going to look like, and think about being near a hub and maybe a central hub in the U.S. And then finally, number eight, what does your potential exit look like? And if you think it's going to be a potential sale, and you've got a couple of potential acquirers in mind, think about whether it makes sense to set up near them, right? Start to build up the relationship with the corporate development team, maybe get a strategic partnership going, maybe a strategic investment going, because we've seen a lot of those relationships that are cultivated over, a year, 2 years, 3 years, and then one day the bigger company says, why don't we formalize this a bit? And that could end up
Yep.
being great for both sides. So again, those are the 8 that we've seen being most material. And what is sort of the number 1, number 2, number 3 depends on the company.
Awesome. What about hiring? How's hiring different in the US versus somebody coming over from Europe or the UK? Or,
So, each country has its own hiring practices, right? Like the way that you do it in the UK is not the same as you do it in France or Germany, et cetera. That being said, I mean, there are some generalizations, and one generalization I will make is that for most UK and European companies, hiring in the US is a little bit like hiring on Mars in terms of how different it is. Like the whole idea of termination at will, where there's not really
yep.
it's not common to have notice periods, and it's not common to have sort of statutory severance, and like it we often say that in the movies, you've got this idea of like you're fired, right? And then you sort of take your box and you walk out the door. Like that's not a thing, right? For the most part in the UK and Europe, but termination at will is very very much a thing here. Long form employment documents, are very much the norm for the most part in the UK and Europe, and in the US, it's a little bit more, IP assignment and confidentiality agreement, and maybe an offer letter, and it's a little bit lighter touch. The whole idea that someone could be deemed to be an employee, right, because of the facts or circumstances around their relationship, even though they haven't signed an employment contract, is something that is kind of mind blowing. I think in on the other side of the Atlantic, right, like contractors can be considered to be employees, not because they signed an employment agreement, but because they would qualify as what constitutes an employee under relevant state law. The nature of disputes in the United States, right, where yes, it's termination at will, but it's also generally not loser pays in litigation, which it is for the most part in the UK and Europe, and that creates a dynamic that if you're not careful about what the exit relationship looks like, as the employees leave, that can get fairly contentious afterwards. And I think a lot of companies coming into the US are surprised that even if they feel that they didn't do anything wrong, they can find themselves in a fairly expensive dispute because each side bears its own costs, irrespective of what the outcome is, for the most part in the US. Maybe the final point that I'm going to flag is the focus on options in the United States is a little bit different than in the UK and Europe, right? Is that in the US, you've got generations of startups, or startup employees, right, who have seen, the big companies that go public or sell for billions of dollars. That often endures to the benefit of not just the management team, not just the VCs, but the employees, right, who have been incentivized through tax advantaged options, for years and years. And I actually once talked to a UK CEO who said that one of their learnings that they had about going to America and spending some time in the US from his perspective, he talked to a lot of potential employees who viewed working for a startup as a lottery ticket. And he said that that's not the way that startup employees generally view working for startups in the UK and Europe. So that focus, and frankly, that sophistication of US employees who work for startups about the potential upside of options and how to negotiate that is a little bit different than what you usually see on the ground in the UK and Europe.
Talking about options and equity, are there any hurdles a company coming from the UK or Europe has to overcome, or legal things that they have to figure out before they can offer options or equity? Do they have to establish another entity, all that kind of stuff? I'm assuming
Yeah,
yes.
I mean, if they're leveraging sort of an employee stock option plan, then generally they will want to have the employees employed, and a subsidiary is a great way to do that. It's hard to make generalizations in some respects because each country, right, has its own rules with respect to providing option plans, right? Like the way that you do it in the UK is going to be different than the way you do it in France, different than the way you do it in Germany. But I think a couple of overarching comments, I'm going to address this one particularly to UK and European companies that are thinking about going to the US. The options generally are going to come out of the parent company, right? Not out of the US subsidiary, because generally the most or all of the value of the enterprise is at the parent level. It's not at the subsidiary level. And so you really want to give the options out of the parent company. The other downside of that, of course, is that you end up creating a de facto joint venture if you've got a subsidiary that is like what 99% owned with like 1% options in your employees or something in the US. Like that's not great from a cap table management standpoint.
No.
But the other thing is the 409A valuation, right? And we in the States are obviously very familiar with that, where in order to provide tax advantaged options in the US, you want to get a 409A valuation. Again, for sort of UK and European listeners, 409A valuation being a valuation of the company for purposes of providing options that complies with the standards set by the US Internal Revenue Service, right? And that valuation often is higher than the valuation that you might get in the UK and Europe, because the standards that the tax authorities in those geographies use are slightly different than the ones that the US IRS uses. And so it's important that even if you've gotten a valuation in your home market for purposes of providing home market options, you do need to get a 409A valuation generally in order to provide options to US employees to make sure that you don't end up with US tax issues down the road, particularly at the exit.
Awesome. Dan, my final question for you is for somebody who's bridged yourself from New Jersey to New York to London. Any recommendations about expanding into the culture here stateside, or just setting up your company, or things to expect from a cultural difference?
Yeah, I would say that the thing about America that became clearer to me, as I started to spend more time in the UK and Europe, but then eventually moved, is that the US is very much a high risk, high reward culture, right? That whole pioneering spirit, that we as Americans are used to, the sort of, going creating the country from whole cloth and then moving westward, right? And from sea to shining sea, that whole pioneering spirit, the high risk, high reward approach, right? Like, I'm not saying you don't find that anywhere else in the world, but it is baked into American culture, right? In a way that it's not baked into other cultures around the world. And I think, again, as Americans, it's almost like breathing, like, because it's just such a part of the way that we are as a country. But if you live outside the US, it's not nearly as stark like that. And it's something that if you are going to move yourself and your company to the United States, or expand, right, to the United States, it's important that you understand that kind of that's what you're getting into, is that, there is a much higher ceiling, if there is any ceiling at all, but there's also a far deeper floor, if there is any floor at all. And some people in some companies embrace that when they find it, and some are put off by it. And I'm not saying it's good or it's bad, but it's a thing. And it's something that it's important to be aware of as you're building a business here, and it's something, and here being the United States, and it's something it's important to know on a personal level, as you decide that you're going to relocate yourself to the US.
Just be ready for it. Dan, we just hit time. Thank you so much. I mean, as always, your insights and your knowledge on this subject are invaluable, and hopefully there's a lot of founders out there that take this to heart, and you can help out, and hopefully they come back to you. Coming back to you, where should people find you? Is there anywhere where they can learn more about this from you?
Yep. So, you can just go to the Wilson Sonsini website, wsgr.com, and my contact information is there. And I'm always happy to talk to companies thinking about US expansion, US fundraising, and US exit.
And there's an incredible article written by Dan on Medium about this topic if you really want to dive into. Dan, thank you so much for your time. We really, really appreciate it again.
Thanks a lot, Chris. Great to talk to you.